Welcome back to FBS Growth School. In today's video, we're going to discuss an important topic for every investor: the different types of stocks. By the end of this session, you'll understand the unique features of common and preferred stocks and the difference between large cap and small cap stocks.
That's right. Knowing these distinctions helps you pick the right stocks to match your investment goals. Let's dive in by first exploring the most common types of stock ownership: common and preferred stocks. Let's start with common stocks. When people talk about investing in the stock market, they're usually referring to common stocks.
Exactly. Common stocks represent ownership in a company. When you buy a share, you own a small piece of that business. And as an owner, you can vote on key decisions, like electing the board of directors or approving mergers.
The biggest advantage of common stocks? Their growth potential. Over the long term, common stocks have historically provided the highest returns compared to other types of investments.
But here's the catch. Common stocks are also volatile. Their prices can fluctuate wildly in the short term, and there's no guarantee of dividends. It's a high-risk, high-reward game.
For example, think of companies like Apple or Tesla. Their stocks have delivered massive growth, but they've also had periods of significant price drops.
Now let's move on to preferred stocks. These are less common but offer unique benefits.
Unlike common stocks, preferred stocks usually don't come with voting rights. But here's what makes them special. They pay fixed dividends, making them a reliable source of income.
That's right. Preferred stockholders are also prioritized over common stockholders when it comes to dividend payments or payouts during bankruptcy. This makes preferred stocks less risky than common stocks.
However, there's a trade-off. Preferred stocks don't typically grow in value as much as common stocks. They're ideal for investors who want steady income rather than high growth.
So, if you're a conservative investor looking for stability, preferred stocks might be a better choice. But if you're chasing long-term growth, common stocks are where the action is.
Now let's talk about stocks based on market capitalization, starting with large cap stocks. Market capitalization, or market cap, refers to the total value of a company's shares.
Large cap stocks are from companies with a market cap of $10 billion or more. Think of companies like Apple, Microsoft, and Amazon, giants in their industries.
The main advantage of large cap stocks is their stability. These companies are well established with proven track records and steady growth.
Exactly. They're also less risky during market downturns. For instance, during the 2008 financial crisis, large cap companies like Coca-Cola bounced back faster than smaller companies.
But there's a downside. Large cap stocks often grow slower than small cap stocks. So while they're a great choice for risk-averse investors, they might not provide the explosive returns some are looking for. Between large cap and small cap stocks, we have mid-cap stocks. These are companies with market caps between $2 billion and $10 billion.
Mid-caps often combine the best of both worlds, the growth potential of small caps and the stability of large caps. They're like the middle child of the stock market.
Exactly. Mid-cap stocks are a great way to diversify your portfolio and balance risk and reward.
So, how do you decide which type of stock to invest in? It all depends on your investment goals and risk tolerance.
If you're young and looking for growth, you might focus on small cap stocks and common stocks. But if you're nearing retirement and want stability, preferred stocks and large cap stocks might be better choices.
And don't forget diversification. A mix of common, preferred, large cap and small cap stocks can help you achieve a balance of growth and stability.
To summarize, here's what we learned today. Common stocks, high growth potential but more volatile. Preferred stocks, steady dividends with less risk. Large cap stocks, stable and reliable but slower growth. Small cap stocks, high growth potential but higher risk.
Remember, there's no one-size-fits-all approach. Your ideal stock mix depends on your age, goals, and risk tolerance.
Thanks for joining us today at FBS Growth School. In the next session, we'll dive into how to analyze a company's financial statements, a crucial skill for picking the right stocks.
Don't forget to like, share, and subscribe to Future Business School for more growth videos. Thanks for watching.